Hey guys, welcome back. Today, out of curiosity, I recreated some of my financial past to see if it would be as depressing as I thought it was, and it did not disappoint. I recreated 6 years of income from, for me, when I was 14 and started working, to 19 when I started paying, room and board to my mother. And I was actually surprised by some of the numbers that came up. I used McDonald's as an investment company, and only McDonald's, because at the time it was a place that I spent some of my money at, and I figured, some of my friends went there, and I might have been motivated that every time they bought a burger, they were paying for mine slightly. So I wish I could go back and slap that 14-year-old right up the side of the head so that he stops blowing all his money. And no, I'm not pretending that I can levitate above all of you here. I put 50% of what I earned at the time net into the savings and investment, not 100%, because I don't think that's particularly fair for a teenager or even possible. So anyway, here you go, some spreadsheet work. Guys, probably the most depressing spreadsheet I've ever built for myself. I built it bottom up. Sorry about that. So it's going to be a little bit inverted here. You have 1997 moving up to the A2 location of 2002. So these are the 5 years before I kind of started having a career and having financial obligations that I was signing myself up for, like rent and car and stuff like that. So in 1997, at the age of 14, I started working. And in 2002, at the age of 19, and in this case, I'm including it, so it's a 6-year span, I was old enough, I was still living at home, but my mom was charging me room and board, roughly $100 a week or $400 a month to be there because I was no longer a minor and a deductible, I guess, for her. So there is an expense that showed up, but for the most part through these years I had no expense other than the ones that I chose for myself, and that's what's important here. Now, as you can see, I didn't take 100% investment. I'm not going to pretend that I can levitate above the rest of you and invest every single penny that I earn. It's important to note that for some of these years, especially 97 through 2000, I was in high school working probably 20 hours a week at minimum wage, which at the time was probably right around $5. The weekly salary I approximated, obviously, but it should be pretty close. So you can see, moving through the columns, the stock price of McDonald's. The reason I chose McDonald's is that at the time, whenever we partied, if we went out, and where I grew up, unlike the States, the minimum age for drinking is 18. So started not too long after, probably 98, 99. Yes, we were going to bars or we were sneaking in. Shame on us. And one of the things we always did on the way home, because it was 24/7, was stop at McDonald's. Small town, there wasn't a whole lot of other choices anyways. So me and my 5, 6, 7 friends would just stop in there almost every week, and we'd have a McDonald's. I had a McDonald's bill, all right? And little did I know, I could have been participating in acquiring shares in the company, and then all of my friends would have been technically spending money making me more profitable because I would have gotten a share of that. And so if you looked line by line, at line 7, so the first year that I was really working, it was at a grocery store, minimum wage. If I had invested 50% of everything I earned that year, and keep in mind I was 14, I really didn't have a whole lot to spend my money on other than video games, I would have gotten a dividend at the end of the year of $62, give or take. I would have owned a total amount of share of 195 shares that year. The subsequent year, if I did the same thing, price went up, so I would have bought a slightly lower amount of shares, but I would have had a total of 345. And then in 1999, the shares went up again, probably just before the dot-com bust. Stocks were riding high, and there was a stock split. So I would have gotten a 2-for-1 on all the stocks I owned before, and I would have added 115, which is where that big number that's bolded comes from, the 999. And here you can see I would have been making 199.88 in dividends every year, which doesn't sound like much, and it isn't, except it would have been equal to me working almost 2 extra weeks out of the year, basically adding a 53rd and 54th week to my year because I was making money work for me. Now, I didn't do this, but I wish I did. I wish I could go back and tell myself to do it. And as you go forward, you can see that, dollar for dollar, yeah, it's going up. And at 19, in 2002, almost $400 a year. It wouldn't have made the biggest change in my life to have an extra $400 in the year. But neither would have been the investment through these years of not spending my money on, honestly, I assume they were dumb things because I don't have any of them for sure. So I'm going to assume I was just, blowing it on stupidity and consuming whatever that I didn't need to. And where it gets interesting is, let's say I had stopped investing altogether in 2002 because I took on financial responsibilities, and legitimately I would not have had that much money at that point to invest. But I would have invested through those 6 years about $18,120. Today's value of this stock, if I never invested again, okay, this is 22 years later, it would be almost $500,000 US. The dividend payout through this period would have been around $9,000. I think I made an error there, but let's just go with that. My rate of return through this was 2,362. Not a bad rate of return when you look at the amount invested, the amount returned. And then the compound annual growth rate would have been about 16%, which, it's not as high as Warren Buffett's and Peter Lynch, who are in the high 20s usually. But it beats the S&P, which is at about 10 on average. And I would have never had to think about this, never made a financial decision or a fundamental analysis of any company. I would have just bought McDonald's because I was a teenager and I liked to eat there for whatever reason, and that's it. Assuming I reinvested all of the dividends through the years, giving them a chance to compound as opposed to cashing them, then I would have still invested an initial capital of $18,120, but in today's value, I would have over $1 million. Now, I cheated a little bit calculating this one, so there's probably an error ratio in there, but it would still be probably well over $900,000 US. So, as you can see, starting early has its advantages. There you have it. Somewhat depressing, and I know that the bulk of the demographic in the channel is a bit older than the teens, but hey, if you're still in your 20s or even your 30s, get started. 22 years of compound work on, in this case, McDonald's as a fiction, was more than 100 times my initial investment, I think. Anyway, it was a considerable investment, considerable return. And if you know a teenager, if you have a kid, if you have a nephew, you just see a teenager on the side of the street and you feel like, slapping them, show them this math or tell them about this math and the power of saving and having compound growth. I'm not saying McDonald's is a particularly good buy today or not. I haven't done a fundamentals analysis on it. I have no idea. It's just back then it would have been a logical one for me just because it was a place I went to all the time. So, I could have my burger and eat it too. Thanks for watching. Please subscribe.